A very good day to all of you. Today we'll be revising IND AS 40 investment property. The objective of this video series is to provide you a pilot view of the entire standard in the least time possible. And for this purpose, we have divided the various principles that are in the standard into concept. So it becomes easier for you to quickly revise it by yourself, right? So without any further delay, let's get into the revision of IND AS 40 investment property. So the first concept that you need to learn in this particular standard is the scope and objective of the standard. What do you mean by scope and objective? The standard applies to which tangible asset, right? We studied in PP, we studied in detail, right? The PP applies to assets which are held for particular purposes, right? So similarly, in this 40 says that properties which are either held for any one of these three purposes, if a property is held for either any one of these three purposes, then what will apply? IND AS 40 investment property will apply to them. Now, let's see what are the three purposes. First is if the property is being held for rental to others. What do you mean by rental to others? The property is being given on operating leases. The property is being given on operating leases. So in case you have a property which is being given on operating leases, then for that particular property, which standard will apply? IND AS 40 investment property will apply. But the most important point to remember here is that the primary business of the entity should not be of doing this rental services, right? The primary business of the entity should be something else. And in addition to that, let's say they had an ideal land, so they have given that for rental. Right? Let's, for example, say that I am a manufacturing concern. So my primary business is what? Of doing manufacturing, right? But let's say I had a property which was left idle. So I thought I'll give it for lease, right? So now this lease arrangement that I'm doing under, it will be this property that I'm giving under lease will be considered as an investment property, right? But in case if it was the other way around, my primary business itself is to give on rental services, then what will the particular property become for me? It will become my inventory, right? It will become my inventory, right? So it is very important to differentiate here whether the primary business of the entity is of giving on this rental services, or the primary business is something else, and in addition to that, this is being happening. If in addition it's happening, then it will be treated as an investment property, right? So first point is if your property is being held for rental to others, right? The second is if the property is being held for capital appreciation. If the sole purpose of holding the property is for what? Capital appreciation. What do you mean by capital appreciation? Let's say I had a property, right, which I purchased for 1 CR near the airport, right? And I expected the airport expansion is happening gradually. So slowly this area will start to commercialize. Slowly what will happen? This area will commercialize. So I believe that the land that I've purchased today for, let's say, 1 CR, after 2 years, I'll be able to sell it for 5 CR. I'll be able to resell it for 5 CR. So the purpose of me purchasing this land was what? Purchasing this property was for what? Capital appreciation. Solely for capital appreciation. In that case, this particular property will be held as an investment property and IND AS 40 will apply, right? So the first was rental services to others, and the next is for capital appreciation. Third is if the property is being held for an undetermined use. Let's say I had surplus funds, so I decided to invest it somewhere. So I have purchased a property. But do I have any specific use for that right now? No, I do not have. Am I planning to use it in my production? Am I planning supply of goods, for supply of service, for admin purposes? No, right? I do not have any determined use for that particular land. So the land is being purchased on an undetermined use. So if that is the case, then what will apply? IND AS 40. It will be treated as an investment property, obviously, right? So then why did I purchase that land? Because I had surplus of fund. I wanted to invest it somewhere. So that is the reason I purchased the land. So which AS will apply? IND AS 40 investment property will apply, right? So that is the first concept. IND AS 40's application and scope, right? Scope of IND AS 40 says what? It will be applied on property which is held for either rental to others, or it is held for capital appreciation, or the use is not yet determined, right? So if it satisfies any one of these three conditions, then it will be treated under IND AS 40 investment property, right? The second concept is the concept of recognition, right? When will I recognize this investment property in my books? So this recognition principle is the same as that of PP, as of IND AS 16, right? So it also says that there are two conditions. The first condition is what? There should be a probable future economic benefit out of that property. There should be a probable future economic benefit out of that property. This is, I always say that this is a very irrelevant point actually, because if I'm a rational businessman, I will definitely not purchase an asset if I do not see a probable future economic benefit. Right? So anyway, this point should exist. There should be a probable future economic benefit. Second is it says that the cost should be reliably measured. Of course, right? Because if I want to recognize it in my books, I need to pass an entry. And to pass an entry, I need some amount to be credited and some amount to be debited, right? So obviously, I need to be able to determine the cost of that particular property. So what are the two conditions for recognition? The first condition says that there should be a probable future economic benefit that should flow from that particular property. And the second condition says that the cost should be reasonably measurable. It should be reasonably measurable. Next is a special note. We'll just see what are the different standards that will apply to properties on different situations. Let's go with the first example. It says that building that is currently vacant but held to be leased out under one or more operating leases, right? It is currently vacant, but what it is held for? For being leased out. So if it is held for being leased out, then which standard will apply? In this 40 investment property will apply, right? Now the second one, let's move to the second one. Land that is held currently for an undetermined use. I said, right, it is held currently for an undetermined use. There was no specific use for purchasing that property. Then also which standard will apply? We'll treat it as an investment, and in this 40 will apply, right? Next, property which is acquired with the objective of subsequent disposal in the near future. Subsequent disposal in the near future, or for development or for sale purpose, or for development or for sale purpose. Here the most important point is subsequent disposal. Subsequent disposal. Now when you purchase an asset for capital appreciation also, your aim is what? To subsequently dispose it, right, and to earn out of it. Now then, why some people will say then this should come under NBS 40, but it is no. Why? Because it says it is for subsequent disposal in the near future, right? So usually when I say capital appreciation, it is usually considered to be long term. And if it is in the near future, it comes under current. So it will be classified as what? Inventory under NBS 2. It is very important. Whenever you see subsequent disposal, need not be just for capital appreciation. You need to see the duration there, whether the subsequent disposal is to be done in the near future or later. If later, then it will come under NBS 40. If you're planning to do the subsequent disposal in the near future, then it will be treated as an inventory and it will come under NBS 2, right? NBS 2. Next is what? Property that is held for future development and use as owner-occupied property. You wanted to use it as what? Owner-occupied property. So owner-occupied property is what? PPE. So what standard will apply? NBS 16 will apply. NBS 16 will apply. Next is property that is constructed or developed for future use as an investment property. The question itself says future use it for what? For using it as an investment property. Then which standard will apply? NBS 40 will apply, right? So two concepts done so far. The first concept being the scope of the standard. So what does the scope of the standard say? That the standard will apply to property which is held for any one of the three purposes. The first being either for rental, okay, the second being for capital appreciation, and the third being for an undetermined use. The recognition criteria says that the investment property will be recorded in the books when there's a probable future economic benefit out of it, or when the cost can there should be a probable future economic benefit out of it, and the cost should be reliably measured, right? Now the concept number 3 we move to, which is the initial recognition of the investment property. Initial recognition of the investment property. When you are recording the investment property for the first time in your book, for the first time when you are recording it, you will record it in what? You will record it in its cost. You will record it in its cost. Right? The principle here in initial recognition is also same as in the 16, but the only and the important difference is that in investment property in the 40, the concept of revaluation model does not exist. What concept does not exist? Revaluation concept will not exist, nor in initial recognition, nor in subsequent recognition. Revaluation concept does not exist in the 40, right? However, the IFRS, right, the international standard gives you the liberty to adopt even revaluation model. But in the IND-AS, right, IND-AS 40, it only has one model, that is the cost model, even for initial recognition also, for subsequent recognition also, right? So initial measurement is similar to that of IND-AS 16, except that revaluation model does not exist here. So cost is nothing but what? Carrying amount is nothing but what? Your cost less the accumulated depreciation less the accumulated impairment loss, right? And again, as I told you, this is very much similar to that of IND-AS 16. So if you see in IND-AS 16, we would have told that cost will not include operating losses, right? It will not include the maintenance cost, right? The abnormal amount of material, labor, or overhead wastage, that and all will not be included. Same concept applies for IND-AS 40 also, right? Operating losses, startup cost, abnormal waste of material, labor, and overheads will not be included here as well. But all the purchase price will be included, non-refundable taxes will be included, and any other directly attributable cost will be included, right? So that was about the initial recognition, right? Now let's move to the concept number 4, the subsequent recognition of investment property. The subsequent recognition of investment property. What is the subsequent recognition principle says? That the subsequent recognition will also happen only on cost. Will also happen only on cost model. So when you follow the cost model, how do you determine the carrying amount? The cost less the accumulated depreciation less the accumulated impairment loss, right? Again, it's the same note that it says that the cost model will apply for investment property initially as well as subsequently. There is no concept of revaluation model in IND-AS 40. However, for disclosure purpose, right, in notes, you can disclose the fair value. You can disclose the fair value, right? Now, moving on to concept number 5, which is property held for more than one purpose. Property held for more than one purpose. If you ask me, this is one important concept in this particular standard in the S40. Right? Now, first, let's understand what do you mean by property held for more than one purpose. What do you mean by property held for more than one purpose? Let's say I have a property, I have a building, right, which has 3 floors. The first, second, and the third floor, right? The first floor, I'm using it for my as an owner occupied property, right? For my office admin, all my admin people will sit here, my marketing, my finance, right? All other teams, sales, everybody will be sitting here. And the second and third floor, the building belongs to me. The first floor I am using for my admin purpose, so it's an owner occupied property. The second and third floor is ideal, so I've left it for rental. So I left it for what? Rental. Now, if you see, this is one property which has more than one purpose. Are you able to understand the title? It is a property which is held for more than one purpose. What is the first purpose? First purpose was it is being used as an owner-occupied property. The first floor is being used as owner-occupied property. The second purpose is what? The second and third floor are as investment property because I've given it as rental to others. Now, we are asking the standard, how do we treat this particular property? Should we classify it under IND-AS 16 or should we classify it under IND-AS 40? Right? Because obviously in this, for the first floor, what is applicable? IND-AS 40, IND-AS 16 is applicable because it's owner occupied property. So should I apply IND-AS 16 for the entire property or should I apply IND-AS 40 for the entire property? Because the second and third floor are being given on rental purpose. So it's an investment property. So the standard very clearly says that first see whether you are able to make a clear differentiation between the different portions, right? Whether you are able to make a clear differentiation between the different portions. What do you mean by clear differentiation? Means, is there a separate legal title? Is there a separate legal title for these different portions? That is, can the first floor be sold separately? Can the second floor be sold separately? Can the third floor be sold separately? Do they have a separate legal title? The standard is telling us to check whether you can mark a clear differentiation. How we will mark a clear differentiation? There should be a separate legal title for all the different portions. If the answer is yes, you are able to make a clear differentiation, there is a separate legal title. That is, let's say there's a stamp document for the first floor separately, for the second floor separately, for the third floor separately. That means the first floor can be sold separately, right? So if there is a separate legal title, then the standard says for the portion which is owner occupied, that is, let's say in our example, the first floor, for first floor, you should apply what? Ind AS 16, property, plant and equipment. And for the second and third floor, which is being held as investment property, for that you apply Ind AS 40. For that you apply Ind AS 40. Are you able to understand? So in case you have a property which is held for more than one purpose, the standard says, see whether you are able to mark a clear differentiation. What do you mean by marking a clear differentiation? Is there a separate legal title? If there is a separate legal title, then for the owner-occupied property, apply Ind AS 16, property, plant and equipment. And for the investment property, apply Ind AS 40, investment property. Right? But you say to the standard that, no, I'm not able to clearly differentiate. There is no separate legal title. I can't differentiate between those portions. Then the standard says, then you will go with significancy. Then you will go with significancy. Right? Then see which portion is being used significantly. Which portion is being used significantly. If in the building, let's say in my example, there are 3 floors and 2 floors are given for rental and only 1 floor is being used for owner occupied. So 2 floors form the majority, which is given for rental. Rental means what? It is given as an investment property. So the standard says, in case you are not able to mark a clear differentiation, then you will go with significancy. If the significancy has investment property as majority, if the investment property is significant, then for the entire property, Ind AS 40 will apply. Then the entire property will be treated as an investment property, and what will apply? Ind AS 40 will apply. Similarly, in the example, if it was different, right? I am having the first and second floor for owner occupied property, and only the third floor is given on rental. Then here, significant portion is what? Of owner occupied property. Then the standard says you are not able to make a clear differentiation, right? There is no separate legal title, right? Then since the significant portion is of owner occupied property, I will treat the entire property as owner occupied, and what will apply? Ind AS 16 will apply. What will apply? Ind AS 16 will apply. Now, a very important note in this standard is, now how do we determine whether it is a significant portion or not a significant portion? It clearly depends on the management's judgment. It clearly depends on the management's judgment, right? So this is an important concept. The concept is what? In case a property is being held for more than one purpose, the first thing you will see is whether you are able to mark a clear differentiation, whether there's a separate legal title. If yes, then what you will do? Then for the owner occupied portion, Ind AS 16 will apply, and for the investment portion, Ind AS 40 will apply. But in case you are not able to make a clear differentiation, then what does the standard say? Then the standard says that go for significancy. So if the significant portion is being occupied for owner occupied use, then the entire property is treated as an PP. And if the significant portion is for investment purpose, then the entire property is treated as an investment property, and Ind AS 40 will apply. Ind AS 40 will apply, right? I hope that is very, very clear. Now moving on to the next concept, which is property that is leased out to the group members. Property that are leased out to the group members. What do you mean by group members, guys? Basically, the holding and subsidiary together will form a group, right? The holding and subsidiary together will form a group. Now, when the property is being leased out to group members, how do you treat it? So whenever you're having a holding and subsidiary, basically you will have two sets of financials, right? One will be your individual, your standalone financial statements, your separate financial statements basically, and the other will be your CFS, your consolidated statement, right? So the standard says, let's say there is A Limited and it has given to B Limited a property on operating lease. It has given to B Limited a property on operating lease. Now, in the books of the lessor, that is A Limited, in its separate financial statements, in its standalone financial statements, this particular property will be held as an operating lease, right? It is held for operating lease. So it will be treated as an investment. It will be treated as an investment. In whose standalone statements? In A standalone financial statement, this particular property that is being leased out to B Limited, which is its subsidiary, will be treated as what? Will be treated as investment property. But same thing whenever you go for consolidation. When you're going for consolidation, in consolidation, A and B are actually the same. We are combining their assets and all of that, right? So in that case, will you again treat it as an investment property? Can I give a property on lease to myself? Because in substance, in essence, actually B is nothing but it is A only, right? In substance, both are same only, correct? So in consolidation, what will I treat it as? I will treat it as an owner-occupied property because it is basically being used for my administrative purpose, right? So in consolidation, it will be treated as an owner-occupied property, and in this 16 will apply. Now there's an extension to this. Let's continue with the same example. A Limited is giving a property on lease to B Limited. A is the holding, B is the subsidiary. And B is further giving it again on lease to, let's say, C Limited. B is giving again on lease to C Limited. Now what will happen? Now, obviously, again, when you do a standalone, again, it will come as investment property only. But when you consolidate, will it come as owner-occupied property now? Because A has given it to B. B has again subleased it to C. And C has no relation with A and B. No subsidiary, no holding, nothing happening. C has no relation. It's an independent entity, right? So in that case, what is happening ultimately? It is being invested. It is being used as an investment property, right? So in this case, even in consolidation, this particular property will be treated under Ind AS 40 only. It will be treated under Ind AS 40 only. I hope it is very clear, right? In the first situation, A is giving it as a lease to B. So when A separate financials were being created, you will obviously treat it as an investment property. But when you consolidate A and B's financials, then consolidation, this will become owner-occupied property. But in the second situation, when A is leasing it to B and B is subleasing it, right, to C, then what will happen? In standalone, again for A, it will become investment property only. But when you're consolidating also, it will remain an investment property. When you're consolidating also, it will remain an investment property, right? This is an important note. So whenever there's a property which is leased out to group members, how do you treat it in your standalone financials and how do you treat it in your consolidated financials is what we discuss here. Right, next is that concept number 7, which says transfer of assets. Transfer of assets means what? Let's say I had an asset, okay, I had a property, okay, which was previously being used by me for my administrative purpose. That in that building, my corporate office was there. But now let's say I've shifted my corporate office to some other building. So that building I've given it for rental purpose, right? So now previously, when the building was being used as my corporate office, then which standard would have applied? In the 16, right? Now the same building, I have moved my corporate office, so I'm giving that building on rent. I'm giving that building on rent or operating lease. So now what standard will apply for this? In this 40 will apply. So there's a transfer of investment that is happening, right? Investment previously which was as owner-occupied property is now becoming an investment property. So the standard says in such cases that transfer will happen in what? In the carrying amount of the asset. In books, whatever the carrying amount of the asset is there, in that only the transfer will happen from the standard, right? Because previously it was treated under Ind AS 16 and now it is going to be treated under Ind AS 40. Similarly, remember, such change that is happening, is that a change in accounting policy? Obviously no, right? It is a change that is happening because of the change in the use of the asset. That has nothing to do either with the accounting policy, nor it is a prior period error. It is nothing of that. It is a change happening because of change in use of the particular property. Previously, the property was being used for owner-occupied, right? Previously, it was used for administrative purposes, so it was under owner-occupied property. So we applied it in the 16. Now it is being given on rental to others, right? It is being used as an investment property, so we are applying in this 40. So such change will not be considered as a prior period item, right? It will not be considered as a change in policy. It is basically change due to change in use of the asset. Due to change in use of the asset. Right, next is change occurs only when there's a concrete evidence of change, right? Exactly. So only if the management has an intention to change, they're thinking that now we are having, obviously in the future we are planning to shift our corporate office, so we will put this building for rent. So mere management's intention to change does not matter. Actual concrete evidence should be there that such change in use has happened. Only when a concrete evidence to support the change in use is there, such transfer will happen. Such transfer will happen, right? So let's see some examples. Let's see this one. End of owner occupation and use as an investment property. So previously, if it was owner occupation, previously what standard was applying? In the 16. Now it is being used for investment purpose. So what standard will apply? 40 will apply. Right? So the transfer is being happening from PPE to investment property. Now see here, commencement of owner occupation from investment property. Previously it was an investment property, right? Previously it was an investment property. Now commencement of what? Owner occupation. Owner occupation means PP. In this 16 will apply, right? Next is inception of operational lease. Inception of operational lease. Operational lease is going to start. That means what is going to apply now? 40 is going to apply. 40 is going to apply on a building which was previously held for sale purpose. Previously held for sale mean what? Previously it was my inventory. Previously it was my inventory. So it is changing from 2 to 40. It is changing from 2 to 40. Next, commencement of development to sale in ordinary course of ordinary course from investment property. From investment property, we are changing it to development in being sold in the ordinary course. Ordinary course means what? My actual business, right? So then it will become what? My inventory. So what will apply in this? 2 will apply, right? So these are some examples of transfer. Okay. And these transfers will not be considered as change in policy. Okay. They are not change in policy. Okay. They are not prior period error, right? And such change will happen only when there's a concrete evidence of such change. Mere management's intention will not be taken as valid, right? And also such change will happen on the carrying amount of the asset. Such change will happen on the carrying amount of the asset. Next, let's go to the 8th concept, that is fair value disclosure. As I mentioned earlier itself, in this 40, only what concept exists? Cost model only exists. The revaluation model does not exist in this. However, in IFRS, the international standards, yes, it gives you the liberty of revaluation model as well as cost model. But in India, there's only cost model. But however, you can disclose the fair value of that investment in your, notes. So the fair value disclosure says what? However, in India's 40, what we cannot do? We cannot record the asset in revaluation model. Revaluation model is not possible, but however, you can disclose the fair value of the asset in the notes, right? The entity is required to disclose the fair value of the investment in the notes to the financial statements. In case the entity is not able to determine the fair value, if you are not able to determine the fair value, you need to first think, see whether why the fair value you're not able to determine. Is it because the asset is being constructed now? Is it under construction? That is why the fair value is not being determined. If that is the case, then you will determine the fair value when it is reliably measurable or when the construction is completed, whichever is earlier, right? In case you're not able to determine the fair value of the asset, first you need to ask, why is the fair value not being able to determine? Is it because the asset is under construction? That is why you're not able to determine the fair value? If that is the case, then you will determine the fair value when it's reliably measurable or when the construction is over, whichever is earlier. And in other cases, if you're not at all able to disclose and it is not under construction also, still you're not able to find out the fair value of the asset, then you will disclose the facts and reasons why it is so. Then you will disclose the facts and reasons why it is so, right? The next concept is disposal of investment. Disposal of investment. Investment will be derecognized on disposal. Obviously, I will derecognize it from my books when the investment is being disposed, right? It will be permanently withdrawn. The property is permanently withdrawn from future economic benefit, future use, and there is no future economic benefit. When will I derecognize the investment property? When I think that there is no future use or future economic benefit that is going to flow from that particular investment, I will derecognize the investment in my books, right? Then in case that then the investment is being sold, then whatever net sale proceeds for how much the investment is being sold versus your carrying amount in your book will give you a gain or loss of that particular transaction. It will give you the gain or loss from that particular sale transaction. Next is measurement of consideration which is receivable on disposal. Measurement of consideration which is receivable on disposal. In case the consideration receivable on disbursement of the investment property is recognized, it is initially recognized on fair value. In case the payment is deferred, in case the investment property is deferred, then the consideration received is recognized initially at the cash price equivalent. What do you mean by cash price equivalent? The excess amount that will be paid because of the deferred settlement, that will be treated as an interest cost, and it will be taken as, sorry, that will be treated as an interest revenue, and it will be taken to your P&L. So you will only consider what? The cash price equivalent. So you will only consider what? The cash price equivalent. The excess amount that you are getting will be treated as an interest revenue, and it will be taken to your P&L. It will be taken to your P&L. The last concept is how to arrive at profit from investment property. In case you haven't rental income from investment property, right? You haven't rental income from the investment property, you will reduce all the directly attributable operating expenses. All the direct operating expenses you will reduce. Then you will arrive at what? Profit that is before charging depreciation. Obviously, it's an investment property. For the building portion, you will be charging depreciation. Then you will charge depreciation for that investment property's building portion. Then what you arrive is the profit from investment property. Then what you arrive is at the profit from investment property, right? So these were all the important concepts that are there in Ind AS 40 property, Ind AS 40 investment property, right? The concept of depreciation, initial recognition, subsequent recognition that I've already discussed also are similar to that of 16, are similar to that of 16. One important concept that is there in this chapter is that property which is held for more than one use, right? The concept number 5, if I'm not wrong. Right, the concept number 5, property that is held for more than one purpose, is a concept that is significant in this standard as such, right? But these were all the concepts that you need to know. We would recommend that once you're done watching this revision series, you go ahead and try solving your ISM, which gives you more confidence and clarity over the entire standard, right? And these notes are available in the description if you want to download them. Thank you so much.